the easiest way to go negate a lack of experience is through a wealth of knowledge.
Welcome to the Fully Funded Show. Whether you're a capital raiser, deal sponsor, fund manager, or LP investor, we've got the insights you need for investing success. Join Sam Silverman each week for expert interviews, insider tips, and strategies to fully fund your ventures. Let's go!
All right, we are back with the Fully Funded Show. This time we have a bit of a different take on an episode. I brought in a previous guest and friend of mine, Randy Smith, to actually interview me versus me being the interviewer. I figured it'd be a great opportunity to actually get to share my story with the audience and really help connect with what I'm working on here internally as well. So Randy, thanks again for coming on and volunteering to help out here today.
Yeah, Sam, thanks so much for having me on the show. Now is the interviewer. I know we did an episode, I think when you first got started. So glad to be here and glad to help the audience get to know you better like I have over the last number of years. So why don't we just jump into it, Sam? Can you tell the audience a little bit more about yourself and your journey to where you are today?
Yeah. I think you were in the first batch of the few episodes that we all launched together. So that was awesome. But yeah, thanks again for coming on. In terms of my background, I think like most people, or some people at least, who end up in a similar space to them today, they knew they wanted to work for themselves in some way since they were young. I had absolutely zero clue what that was. Like when I first started out, I did everything from buying and selling sneakers wholesale, right? I would go buy sneakers. We'd go get booths and tables at events like Dunk Exchange in New York and go resell used shoes. Think, Nike Dunks, Air Jordans, right? Everything in between as well. And, from there, right, I'm like, okay, what can be a little bigger, a little bigger, a little bigger? I found a niche in the, teen nightclub space where we'd go rent out big event spaces, get a DJ, and go sell tickets. And that's one of my first experience with sales, or one of my first true experiences with sales, actually sellers working under you. We would get a kid in every school to go sell tickets and pay them a commission. And you learn a lot about, people, learn a lot about sales, learn a lot about how to drive demand. And it was a really interesting experience. We did, a handful of events, probably had about 2,000 people-ish at our biggest event, 1,500 people at our biggest event. And, probably 30, 40 sellers in different schools, figuring out how to go build demand, figuring out how to go drive people to an event. It was a really cool experience, but being that it's a teen nightclub, right, like your demand phases out pretty quickly. Kind of transitioned off of that when I was like 15 or so, right? Did really well, put myself through college, put, a lot of money away as well from that. And, from there, went to school, had, again, no clue what I wanted to go do. Thought it was finance, realized that I didn't love the finance side of it, right? I understood numbers pretty well at a high level and like, okay, what's going to be more actionable quickly? And got into marketing and finished the degree in marketing. And like most people, when they realize they're a graduate in college and have no plan at all, I went on my job board for school and found a sales development role, right, in tech, where you are cold calling, setting appointments, and it is exactly what you think you're doing, right? Like you're in a, sales floor type room in a, true tech startup type place, think with like 30 or so employees, and you are hitting the phones, you're on LinkedIn, you're on email, right? And your sole job is go book appointments with people who, are your target avatar to go sell to, and go pass those appointments off to more senior sellers. And I know your background as well was in sales prior to, and it's a great place to go learn a lot. And, you get used to a ton of failure and having those like small successes throughout the day that really shift your whole perspective on things, give you that longer term horizon and outlook where I think sales helps you a lot, that transition to entrepreneurship. So it's there for about a year. Yeah, go ahead.
Yeah, let's dig into that a little bit. So, I have similar background as well. My first professional jobs were those cold calling, outbound calls, those roles. So what kind of lessons do you think you learned from those early years that you're actually bringing into your day-to-day activities today?
So I think the biggest thing you find is how to go profile, identify who it is that you want to go sell to. So, for example, I think understanding your buyer profile is so crucial, where the more you can understand and think and operate as if you're in that person's head, the better you can go relate to them, right? The better you can go position what you're looking to position to that person, right? Because, for example, say, you're selling to VPs of sales in tech, and say you're selling to chief, information officers. Usually, very different types of people that you're selling to. So, for example, that VP of sales in tech, they are very, usually financially driven in terms of owning a number, owning a quota, managing a team in that sense as well, or having to go report their numbers up, having to go have performance, right? Versus someone who, and likely more open to taking risks, right? Likely more of an outgoing type person. And obviously, these are all generalizations, right? You want to go build a person, give them a name even, right? Build a person that fits this criteria, that fits this mold, and figure out how they think, how they operate, how much they make, how old are they, how long they've been doing their role, what hobbies they have, right? Really think of it as you're building like an FBI profile for someone who you're going to look for. Whereas that, CIO, they may be more focused on, they must be maybe much more of a introverted type person who is, much more analytical and data driven, right? Or they may be, much more so in front of a computer screen, and they've, have gone the more risk averse type route to get to where they are, right? Still very successful, may make more money than the VP of sales, right? Just all figuring out kind of who that person is and what it is they're focusing on.
You're already at a very early stage. You're digging into that avatar development, it sounds like, which I know by spending quite a bit of time with you over the last couple of years. We spend a lot of time talking about avatars and really tailoring our conversation and tailoring our presentations to the people that we're talking to. So that was started very early. Were there some big lessons throughout that process in avatar development, or maybe for folks that are in the space, like some watchouts that you learned to avoid making some generalities or some challenges you ran into with that process?
Yeah, I think understanding who it is that you want to go sell to is really important when you think of getting into a field or taking a job, right? On my end, I loved selling to people where you were selling some kind of growth, right? You were selling some kind of end result that was more fun, right? Like selling to a VP of sales, selling to someone who is owning a full digital product, or selling to someone who is looking at, making investment from, for themselves and their family, was a lot more enjoyable than going to sell something that was very technical, right? And one's not right, one's not wrong. I think it's really just important to understand what type of avatar do you get along well with, right? What type of avatar can you go relate to, right? We're in my business now and looking at Silverman Capital. 90+% of our investors have come from or are involved in the tech world, right? In sales. And it was a position that I can go relate to really well. I understood how they thought because it was myself a few years back. And I really liked working with those type of people, right? So just understanding is who it is that you feel is that you have access to, who it is you feel is that you have a connection to, and who can you really understand well. There are certain people out there who can understand well and some not so much. And you just have to go figure out how you can go align to those folks that you feel as though you have an in with in some sense.
So what do you say to the new entrepreneur that comes in and they don't want to hone in on one specific avatar? Their thought is anybody that can write a big check or anybody with deep pockets is the person that I want to be talking to. How do you address that with folks that you're either coaching or guiding through this process?
So I think one thing you can go dive into really quickly too is like if you go pull up LinkedIn Sales Navigator and you say, like, even take mine for example, right? Say you're a VP of sales, director of sales, or a CRO, right? Chief Revenue Officer, or like a senior account executive, think someone who's selling 7-figure plus deals. You can go narrow that search on LinkedIn, right? People in America, people in tech or software, people in these 3 or 4 type roles. And you can assume, right, if you give someone's LinkedIn profile in sales, I can give you a ballpark of their comp package, right, in terms of their base and variable. I'm sure you can as well, being in the field too, at least with some degree of confidence. And say that baseline for you becomes $300,000 or $400,000 a year, this person's likely making that much, or their plan says they should make this much if they hit their number. And you probably have, I think this recently, it was like 500,000 people who fit that criteria just in the US, or like 400,000 people. If you go think of like my business, I probably have 300 active investors across our deals. There's different people who invest in our projects. That's 1/2000th of the total population of people in those tech sales roles. So I think people, they're like, okay, if I go target this really small niche, I'm missing out on all these people. And you may, but you're also can go speak to and convert those people in that niche at a much higher likelihood than you would if you went way too wide in doing so. So what I'll tell you is that if you want to go create content, if you want to go connect with people and really have them feel as though they understand you, right? All of us who are active on LinkedIn or social media, you get reached out to constantly from people trying to book a meeting with you, trying to go sell you something, trying to get invest in something. And a lot of them you likely ignore. But the ones that are really tailored to who you are, you probably read. Like I know for me, for example, I'm either very, very difficult to go sell or very, very easy to go sell, right? Because if you're really relevant and it's timely and you answer questions efficiently and you have something I'm actually looking for or didn't realize I need, I'm a very easy buy, right? But if it's something that is just so off, right, or not relevant to what I'm doing, I'm a hard no or not answer. So what I tell you is that there's likely enough prospects in your niche that you want to go focus on or that you feel connected to. You don't have to go super wide, right? So I think I had this conversation on Twitter recently where someone was, I'm like, hey, what's your, they're raising a fund. I'm like, okay, what's your ideal investor? I think they said something along the lines of they can write a check for $250,000. They're likely not going to go sue you. They want to be totally passive and something else. I forget what it was, right? But just like these characteristics that, hey, we'd all love that. Somebody can go write big checks, wants to be hands off, won't sue you, right? Wants to be totally passive. And those characteristics are awesome, but it's tough to go build a persona based on that. There's certain personas you can go build that may have a high likelihood of getting you to that place as well. But I'd say you want to really dial in on who that person is, right? What role are they? How old are they? What's the rough income? What's their net worth? What's their background? How long they've been in their career for? Do they like their career, right? Do they have longevity in their career? Job security versus career stability, right? All those things that will help you understand, is this someone that you can go relate to? And when you do relate to them, how good can you go be at it as well?
Love it. Great answer. I can't agree with you more. I was of the mindset initially before I spent a lot of time in your community, Fully Funded, where I wanted to just cast the large net or the wide net. And I honed in very quickly, the same thing, like high income W-2 salespeople, specifically in financial services or in technology, was my avatar because that was a previous version of me. And who am I going to connect with the most is somebody who is very much like me. So what I know myself is that if I were to start reaching out to doctors or lawyers or other folks that are professionals in other industries, like I have no credibility with those folks. I'm just another sales guy. And I think that comes back to this point where, you build credibility with people where you've already had success. And Sam, you've had a ton of success going all the way back to the sneaker sales days. So you had that under your belt when you got started. So what do you say to the new guy who maybe they're newer in their career and they don't have 10 years of, all the awards and accolades? Like how can somebody like that get started in this space and find their true avatar?
Yeah, so I think part of when you start, you have two things, right? You either have a track record of success to go build off of, or you have something you can make up an effort. And that person likely falls into the latter category where you're going to have to go do a lot more work to go build that credibility. So what I would say to someone is go figure out, go trial out a few different personas you want to get in front of and go learn as much as you can about them, right? The easiest way to go negate a lack of experience is through a wealth of knowledge. And when you look at someone who is, they may not have a lot of experience in a certain area, say you're brand new and you're like, hey, I want to go start targeting accountants or lawyers, right? And the more you can go learn about accounting, the more you can go learn about law, the better off you'll be, right? Or say you want to go target surgeons, right? Go and understand all these different things of issues that surgeons run into, what their day-to-day looks like, what the path to becoming a surgeon is, right? Go interview people in that field and just go ask them questions, right? Don't have to go get a $200,000 education. You can go say, hey, Mr. and Mrs. Surgeon, I'll pay you $500 an hour for a phone call for you. In that phone call, what I'm going to go do is ask you 50 questions all about your field. There are things that'll be very easy to answer for you because you know your field well. But things for me that I want to go learn, understand that is this something that I want to go dive into and invest more resources against. So it becomes, that $500 is a great spend. And I'd say if you hit up 10 people, at least 5 of them will take you up on that if approached the right way, where you're making the ask for yourself, but you're also offering something too to go show you value of their time. Some people may do it for free, right? But I think it's helpful. The more that you can go learn in this field, you don't have the credibility of doing it yourself, but you can have the credibility of knowing that role inside and out from their perspective, and then go share that content too, right? Like if I was something like that, it's like go create an article saying, hey, I spent 80% of my net worth going to talk to 10 surgeons in the last 6 months. It's all relative, right? Like $5,000 to someone starting out may be a ton of money, but it may be nothing to someone else relatively. But if you kind of phrase it as that, here are 20 things I learned about how surgeons think about investing. And then go write an article about it and go share it with surgeons and get their feedback. I'm sure they'll give you the time of the day that way as well. So you're going to go work your way into that persona, and you'll also get a feel for it too. Are these people that I can go relate to? Like some people you may interact with in life, and you're like, okay, we click right away. And some people just not at all. And nothing's wrong with that. Just you need to go focus more on the former than the latter.
No, I think it's a great point. You have the experience or you have the hustle early on. And from a corporate America sales role, we used to do that as well. And we would block our days or weeks or efforts to where I'm going to focus on construction people for the next 90 days. And I'm going to learn everything I possibly can about that space. So when I'm talking to them, I can build some credibility just through that. So, well, let's jump back if we can, Sam. I know you didn't go from an SDR to being like this wildly successful, fully funded owner, involvement in all these other projects. So talk about the next phase of your career that led you to where you are today.
Yes, that first company I was in actually shut down. So super early startup, 30 or so people. The CEO is a lifelong mentor of mine and now a good friend of that company. And he was someone whose office I would just live in until he would kick me out, right? Like part of the benefit of going to a super small company is that you have a lot more access to those executives who are in the company, whereas in a Google, a Microsoft, awesome places to go work, right? But you likely don't have access to the C-suite there when you're just starting out. Likely don't even have access, to be in the same room as them at all. So this was something I took advantage of in a huge way. Someone who learned and taught me a ton about just selling. And selling in a way that, people have this misconception of sales sometimes where it comes as sleazy or as a win-lose scenario, like really taught me a lot about how to actually create scenarios where everyone wins and how to go understand people to where you can go align with them to help them understand, yes or no in a way that's great for them. So that company actually shut down. A bunch of us moved over to a direct competitor in the space. And there was teams of probably 50 people plus doing my role instead of 5 or 6. And it was something that for me was a great motivator. When you look at the scoreboard, it was a very volume-based job, right? Where you can go make up that learning curve in effort. So I kind of view it as you have 2 multiplications, right? One is your output as a whole number. And the second is multiplied by a conversion of how good you are at your role. And you can really go increase the former while the latter starts to pick up over time. You get better at what you're doing. So for me in that period of time, I did everything I could to go do more output than everyone else there. And in that time, I got really good at what I was doing. So quickly, I was the top person out of 50 plus people every single month over month for about a year period of time. And I realized, and so I'm sure people listening to this too, realize that at your certain company, you may hit a ceiling. And it's not a bad thing, right? For me, I hit the ceiling in the sense that I think there's 2 kinds of people. Either you're a builder or you're a stabilizer, right? I think a builder is someone who likes creating things, right? Likes their own process, likes going 0 to 1. Think of the stabilizer, someone who comes in and can go enforce, right? Those same actions, right? Go drive a team forward. And there's huge value in both those things. I just knew the company I was at, there were really no more building type roles left, right? It was more being a cog in a machine versus creating the actual, path of the machine itself. So at the time, my former CEO offered me a new role to go build out a team like the one I was working in at a publicly traded company, where I thought it was a great opportunity for the reason that he's like, if you build this right, you can keep hiring, we can keep spending, and it's more so the company itself was the place where they can go from zero to dozens of people really quickly if things proved out well. So okay, cool opportunity. Where in some companies you have to go wait for the company to go grow to hire more people to have your role increase. Where it was there if I delivered. So okay, I was ready for a change. The job was up in New York part time. My mom was still here. I'm actually here now as well. So I love coming up to New York really frequently. And fast forward about a year and a half, we're up to about 100 people or so in the company in terms of that department. And you learn a ton. And kind of over that time too, like in sales, it's a great opportunity where, especially early in your career, if you perform well, your income can double year over year for at least a handful of years. And mine did just that. So I'm like, okay, passive income, what's that? My first thought was, like most people, I'll go buy single family houses and put a long-term tenant in there. And got one house off of Roofstock, actually found the owner of the house himself on LinkedIn, reached out to him and I'm like, hey, if you have more houses like this, I'd love to go understand the process of going to buy them. Definitely interested. Fast forward to where we are today. I think I purchased 9 or 10 houses from him in total. And it was going well until it wasn't. And I'm like, this is super passive. I'll make a few $100s per house each. I'll go do this for a handful of years. I'll have 30, 40, 50 houses to make $200, $300 a month each, and I'll be good. And what I realized was just that the time and transaction, right? The finding the property, the loan, the managing the property, right? All these different areas that took up time. I realized it was just not what I wanted to go do. And being in that sales role was a place where I can go, make half what I should make if I'm distracted and be close to getting fired every quarter for performance. Or it was a place where I'm like, okay, I can go take a step back and like really grind in this day job and make 2-3 times what I should make by performance, right? In sales, it's one of those places that if you perform well, you can make, double your commission rate over your goal or triple your commission rate over your next tier of your goal. So for me, it made a lot more sense to go focus on how can I go make more money in my day job and find things that are actually passive to go invest into. So I sold that whole portfolio to Zillow. Luckily, they were still buying homes at the time. It was when they were the automated buying process, which worked out great. The homes were, most home buyers in that price point would have been FHA type home buyers, where anything goes wrong, they're bringing 3% down to the table. Anything goes wrong with the appraisal, with the property, with cash, right? That's out of your pocket usually, because usually the buyer can't go complete the transaction otherwise. So made my life very easy. Sold 9 or 10 houses in a period of like 3 months, offloaded all of them, and then started aggressively listening to all the podcasts on real estate and found syndication and fund investing, where I can go buy fractional ownership in a larger asset and actually be passive. And fast forward, I think 9 months, I invested in probably 20 or so deals, everything from short-term rentals to multifamily to mobile home parks to debt to storage to, I got really aggressive in terms of like, hey, these are all flyers and this is a education program on what's going on. And luckily that worked out for the most part pretty well and gave me really good exposure to doing the deal side of it. Right, became friends with a handful of partners I had, and learned a lot more about what goes into the space. And what I really found was that there's 2 things that matter. Well, 3, but 2 that are usually equity-driven type roles. Right, 1 being you find deals, and 2 being you find capital. And for me, the capital piece made a lot more sense to me. Right, the ability of going to partner with experienced groups, right, to go build lists of investors that we can go partner with, experienced operators in different asset classes to go help work on their deals.
Awesome. So it's a similar journey we hear a lot of people talk about that start in single family. They decide they want to go bigger. That moment when you start doing the math and thinking, one $8,000 HVAC unit is going to wipe out all of my earnings for the next 7 years on this deal. And a lot of people go down the multifamily route. Now, I'm curious, you had that moment where you started thinking, if I just double down at work, I can make 10 times more than what I'm making with these homes. But did you think at that point about possibly just jumping into multifamily or bigger deals instead of just going down the passive investing space? Or were you convinced that that was the route to go?
I thought about it, and what I knew is that my opportunity, like I didn't have a big safety net at the time. I had the money I invested into deals, and that was some company stock, and that's probably about it. And I didn't want to go put all the money I had into one project. And I also knew that if I am still working a day job, right, 50, 60, 70 hours a week, some weeks, and I had distraction where say that there's an issue with the property and I couldn't go be as attentive to it as I needed to, it could impact my investors. It can impact myself, right, really negatively. What I wanted to go find was things that I can go build and grow while I had the day job. Like I'm not a big burn your boats and go all in type person in that sense. I think you burn your boats once you already have a different boat to go swim on. And like people want to go jump ship. And for some people, it's the right choice to go do. But for me, I wanted to go build something that I give myself security and stability before I went all in. So between the investments I kept making, the deals I started partnering on as well as a co-sponsor, fund of funds, right, through an SPV, I started building up more passive income that way as well and started building up a business that was sustainable going forward. So for me, I'm like, once I hit a certain point, I'm like, okay, now I can go leave. Like I view it as there's a calculation everyone can go do is, your monthly spend, and then you have what do you actually have in passive income, right, or active income that you maintain. Subtract those two things, whatever your net spend is every month, and I've got X dollars in my account left. That's how long your runway is. And for me, like that runway piece of it mattered a lot because it's kind of go back to the background story as well. I was thinking about 2 years, made one more jump for 2 more years as well after that, and I probably hung on more than most people would in terms of their timeline at a corporate role. And the reason I did that was that, one, I didn't hate my corporate job at all, right? Like I still enjoyed doing sales. And it was something that I knew that, hey, if once I leave, I can never go back. And I think a lot of people make that jump saying, hey, I'll go leave. I'll try for 6 months. If it works out, great. If not, I'll go back soon. I think part of what entrepreneurs realize is that one of the biggest things you have is your longevity. If you can go last for a while, you'll likely figure something out and be successful. If you have to go back or you don't give yourself enough runway, it's tough to go build something that you can truly sustain yourself on and really grow.
Yeah. Well, let's dig into that as well. I think there's kind of the common theme that I hear when I'm talking to people that are planning their exit from W-2 is they want to have replaced their W-2 income before they leave. What are your thoughts on that? Do you think that's the right strategy?
I think that's BS.
Okay.
I think that's
dig
BS
into that
too.
if you can.
And
Yeah.
depending on what it is, right? So say, for example, someone's making $200,000 a year, right, in a corporate type job, and they want to go become a multifamily operator themselves doing deals. That $200,000, you're probably putting, $20K towards your retirement, right? Call it $20K, so that's $180. You're probably paying, depending where you are, 35% taxes. So call it $125, right? Call it 11, even round up, call it $11,000 a month in terms of your actual net. And then you probably want to have some for savings and investments, right? So say you're putting $2,000 a month this way as well. You're really only have to go replace your $9,000 spend there. So I think that's a bigger thing is that replacing that $9,000 or get close to it totally makes sense. But I think you're gonna have to go save as much in retirement. I think you're gonna have to go put money towards a 401k, and to also think that your money will be less tax efficient than your working W-2 job. As the W-2 employee, you have the lowest ability to go, use a tax code to your advantage. Right? The tax code really favors owners and operators in what they're doing. And so what I'd say is that, that may be a bit too long of a horizon. But what I'd say is you have to be really comfortable in making that leap. So like saying you have to go replace your full income, like that's tough to go replace full income like that really quickly. Because if you look at it from the lens of you're investing your own money, right? Say you're making, 8% of your money, you have to have what, 1.2, $1.4 million to go break even on that 9,000, which is a lot. Not everyone has that up front, or that monthly number they have to go hit is much higher, depending on their level of success as well. So I think just whatever you feel comfortable with yourself as to how much you have and what that trade off is, right? Like if you can go say, hey, if I go wait one more year and I'm in a super high earning job, I don't hate my job today, and I don't feel as I'm losing that much opportunity, right? Like go keep doing it. I think it all depends on what it is that you want to go do as well. When looking at, hey, do I go jump ship now? Do I go wait? Do I go keep building? Right. So, because a lot of these things, the more buffer room you have in terms of your cash flow, passive income, income from your new business, and then just your overall savings, the more you can go think long term with what you're doing as well. Right. The more you can go build for the future. And usually in business, the more you can go delay earnings wise, the more that then pays you in the future as well.
Yeah, absolutely. So I'm curious. Did you? I know you were a very heavy passive investor, and I believe you actually started your entrepreneur journey with doing businesses before you left your W-2. So how long after you launched your businesses were you still employed? And talk about that transition and what that looked like.
I probably made it about a year and a half when
Okay.
I still was on the more active side, right? The passive investments, I don't consider active at all just because you're writing a check, you're reviewing a deal, writing a check, and you're getting updates and distributions monthly, quarterly, whatever that may be. And on the active side of it, can actually doing deals myself, probably a year and a half in my day job before I made the full jump. And at that time, I knew it was time, right? I'm looking at, I wasn't going to sign up for a new fiscal year. And in tech, I'm sure you may have experienced this as well in sales, is that, 1 year at a company, you may make X for your production. That same year, that next year, you produce the exact same thing, you may only make two-thirds of X. Where in tech and sales, it's awesome. You can go make a lot of money. You can go have a lot of freedom. But you don't realize that your earnings are really tied to your goals, right? How they say your commission brackets. So say 1 year your quote is $1 million and that pays you out 100K in commission. But next year your goal may be $1.5 million and it pays you out 100K in commission. So your rate of earnings goes down for the same production. So for me, what I saw in that second year, I was going to make two-thirds what I made in that last year and have to work harder to get there. And I'm like, okay, the following year after that, that's just not worth it for me to go do that. I don't want to go sign up for a full more year because I think half my compensation commission wise was tied to a full year number that I didn't see a path of hitting. And in turn, that would have been zero. So I'm like, okay, do I want to work this job for half of what I made 2 years ago when I have something else really building? And most people I talked to were surprised I held on as long as I did to the day job. And yeah, so I mean, it becomes, I'd say it's an equation. And it's not like a number driven equation always too. Part of it is, do you get bitter going to work every day? And are you causing issues for other people that don't deserve that, right? Whether it be your team or the people who you work with across, through other departments. And if you're not doing your best there anymore, I think it's time to look at leaving if you're in a place where you can go sustain it. And for me, like I wasn't doing the best I could have there, and that wasn't fair to others who my job impacted, both my team, the other members of the leadership team. And I'm like, okay, it's I'm not doing one more year, so like I'm out. And
Yeah.
yeah.
No, I think it's a great point, and at some point there's an opportunity cost to you to staying in that role. You're costing yourself money because you could be doing more with your entrepreneurial things that you want to pursue. And then I've always said in sales, when you stop believing in what you're selling, it's time to move on. Whether that's the company, whether that's the product, whether it's your exchange of time and energy and effort for the dollars that you're getting. Once that is not attractive to you, it's time to move on. So let's talk about those early days as an entrepreneur. Why did you get into the business that you got into? Did you go all in one area, or did you spread your time and energy among a number of different activities?
So I went all in on one area that was spread out in a few different areas. So
Okay.
what I mean by that is that I went all in on really building connections of in two ways, right? One, on the operator standpoint, in terms of people we can go partner with on their projects. So, for example, work on finding great operators in a given asset class in a given market, where I can go bring my investor base diversity, right? And the other end being finding great investors who want to go partner with you on deals as well. So I view it in two buckets there, right? One is the operating partners and one of the investor partners as well. And I went all in on both those areas. And part of it was to go find great deals to go partner on, and the other side of it was to go find great partners to go partner with. And they're really different in nature, right? Like finding things that interest you in different ways. For example, we've been in probably 5 or 6 asset classes at this point and have, good experience in certain areas, okay experience in certain areas, but you want to go give your investors and yourself the best chance of success across the board and almost view it as a blended portfolio. So we want to give them different deals in terms of duration, right, and length, right? So, hold time, whether it be some liquid options, more short-term options, some more of like that 5 to 7 year hold type options, and also the we'll never sell these type options as well. Each of them solve a different, part of your portfolio and appeal to a different person. Also different markets, right? Certain markets have done well, certain markets have done okay, certain markets are not so great, right? So you want to get a nice blend across the board, right, in terms of the markets that you're in. And same with the asset classes.
So you have a very similar model to what I have with my organization, as you know. And I don't know if it's that I've been copying you for many years or what that is, but generally that's what I'm trying to do as well. And you mentioned the type of assets where it's a buy and hold essentially forever. And I run into this challenge personally where I'm not sure that I want to have those type of offerings because that is a forever business. And I'm not sure that I want to be managing a fund in 15 to 18 to 20 years from now. So I'm curious what your thoughts are on that.
Yeah, the deals that are the forever deals, I actually put a lot of my own money into those as well.
Mm-hmm.
And my take on them is that, and those assets are mobile home parks and RV campgrounds. And the reason is that you're really leasing dirt with some amenities and community around it where they have negative supply, where they have laws that restrict new building, and your operating expenses are so low that people typically stay there for long, long periods of time. So for me, like I view that as the safest part of my portfolio across the board, where those are things that will pay us in a tax efficient way for years and years and ideally decades to go come. When we say we'll hold it forever, I'm sure at some point someone may make you an offer that it's foolish to say no to. Um, so for us, I like having a big piece of my portfolio with things like that. You also get to a place too where, for me, the not striking out in a deal actually holds a lot of weight, right? Buying a deal that is cash flowing, 8% plus from day one, or at least year two, and that has negative supply, ease of operations in terms of costs, and is a asset that we really believe in. I feel pretty comfortable that that's not going to lose money over a long period of time.
Okay. No, and I think that becomes more and more important, especially with what we've seen in the last few years. We've had a lot of deals that have been somewhat challenged with the economic changes and the interest rates increasing and just all the uncertainty, increases in cost and expenses. So for the investor that is looking at creating a diversified portfolio at this point, like what type of advice or what type of direction do you give to your investors? Do you suggest spreading dollars across multiple deals and operators, or do you give advice or just simply provide different types of deals to your investors?
Yeah, I don't really advise the investors in terms of where they should go place their capital. Just more so, like my goal is to really help explain the different nuances to each deal and how I would think about it if it were me, in terms
Okay.
of where I would put that money if it were my personal money, kind of how I break up my own portfolio, the benefits, the pros and cons. I think it's also helpful as well to be able to go say, these are the good things with this deal, these are the bad things, this deal, these are the good, this is the bad. These are all things that I think about, and go make your choice and go decide if both, not one, neither, either's fine. And for me, like how I think about it is that when you're first starting out, like pick one area to focus on. Don't try and do 3, 4, 5 deals. because then you become spread really thin. Like, go focus on getting one deal done with a group that you feel very confident in. And you don't have to go for the home run type deal. Like, go for a deal that you feel is stable, people that you trust, people that you have ideally known for a period of time, people that you can go reference and background check, and everything comes up in a way that you'd want it to. That matters more so than the deal itself, usually, right? Like, the who as to who you're working with matters a ton when looking at partnering up accordingly. Because some of these deals that we purchased will own forever. And those are people that you want to understand who it is you're going to be working with for that period of time as well. And that becomes a huge, huge piece of it. Like, I'd rather work with on a lesser quality deal and a higher quality operator versus the other way around.
Yep, absolutely. Well, very good. Yeah, it's been fun to hear some new things about you, Sam. I've been following you for a number of years, as you know, and I learned some new things today. What's in store for you and Silverman Capital and potentially your investors as well?
Yeah, so there's a few things we're working on right now. I think there's an opportunity right now in the more the private equity sector. We're looking at going out and buying businesses, right? We feel as though there's a lot of opportunity when looking at these more boring service type companies that are trading for low multiples. Like real estate right now, multifamily trading for 16 to 18x in terms of a multiple of NOI. And you have a lot of these businesses trading for 2, 3, 4x that you have a lot better yield and cash flow against them. And if you can go build out an engine to go attract them and go acquire them in an efficient way, you can be in really good shape overall to go roll those things up, right? Go take a level of modern marketing to them, go bring things in house like legal, accounting, bookkeeping, back-end integration systems where you can go, you don't have to really like grow these companies, just much more so make them more efficient. And I think there's an opportunity right now to go take advantage of middle market private equity firms, bigger private equity firms, and institutions that want to go play in this space. They just can't go out and acquire companies for $5-10 million a piece. They have to go write checks for 20, 30, 40, $50 million. So they're paying you a premium to go out and do the legwork, right? Go find them, organize them, back in systems together. And in turn, those multiples can go from 3 or 4 to 7 to 8, and that's a huge, huge swing. Like, think if you're buying a real estate deal and you cut your exit cap in half from your going cap, things look pretty good pretty quickly. So we feel as though there's opportunity right there, right now, and we're working on. I see that as something that's super appealing. I think real estate will always have a place in the portfolio, but I think we're always looking at opportunities in the market that we feel as though give us a better asymmetric return overall. And on the other side of this as well, we see an opportunity in the fully funded umbrella as well, right? To go help empower both operators, capital raisers, entrepreneurs through all things from education, coaching in that space as well, to service companies for things that they may need. Like, part of exercise we just did internally was, what are all things that we're spending a lot of money on ourselves? And how can we go build this better, more efficient, and ideally less expensive for members of our community? Right? Think things like virtual assistants, think things like a CRM or web design or bookkeeping, right? All things that are on top of our mind internally, that how can we go create this for, one, bring it in-house. Well, first, one, outsource it. 2, bring it in-house. 3, kind of master it in-house. And 4, go out and repurpose it to members of our community and our network. And it's just figuring out what those things are on your end that if your expense that you're getting asked for day to day and you have distribution for, you can get quick feedback on as to how to go build something that people really find value in, and you really have one point of contact to go to have all these different service companies that you'll need throughout your journey as an entrepreneur.
I love it. I love it. One-stop shop for that specific avatar in that space. And I like the fact that we're seeing a shift, Sam, over to this small business acquisition. I think there's a wave of boomers that are selling their businesses now as well. And maybe their kids don't want to take those businesses over, but they're well-established, well-branded, highly efficient organizations that, as you said, if you can buy 3, 4, 5, 10 of those and bring them together, that creates a pretty exciting investment opportunity for your investors as well. So, well, Sam, this has been a lot of fun. It's the first time I've been asked to be on a show to interview somebody. So that was a new twist. Thank you for that. I continue to learn just a ton from you and everything under the Fully Funded umbrella. So yeah, thank you so much for having me be a part of this conversation. And I'll look forward to continuing the conversation.
Cool, man. Yeah, thanks for coming on. We appreciate it.
All right.
Thank you for tuning into the Fully Funded Show hosted by Sam Silverman. If you are enjoying the content, let's take your journey further in the Fully Funded Mastermind. The Fully Funded Mastermind offers more than just insights. It's a mastermind community designed to solve the real challenge of raising capital. By joining, you gain direct access to strategies, coaching, and a network dedicated to turning your financial goals into achievements. Don't let capital raising be a barrier to your success. Visit fullyfunded.capital to explore how our mastermind community can pave your way to financial growth.
Thanks for tuning in to the Fully Funded Show. If you enjoyed today's insights, hit follow, share with your investing pals, and drop us a review. Connect with us on social media for bonus content. Your success is our mission. Keep those funds flowing. See you next time.